The best performing asset that you could have actually invested in wasn't some amazing high-paced growth stock like Netflix or Tesla or Amazon, wasn't even a hedge fund or some crazy SPAC. It was Bitcoin, and it won by a huge mile. Bitcoin averaged a growth of over 200% per year for the last 10 years, and its whole cumulative return was a whopping, wait for it, 20 million percent. Not thousands, 20 million. The world of cryptocurrency has certainly come a really long way since its early foundations, from weird internet currency that only a few people were talking about to a complete mainstream success that all the different banks and institutions want to get their grubby mitts on. I think it's pretty fair to say that this very highly volatile and highly speculative asset class is slowly becoming a staple of many investment portfolios, and in the not too distant future, I'd probably put my money on that almost every single investor will have some kind of exposure to the cryptocurrency market at some point. Investment is no longer just coming from teenagers in their basements, it's coming from regular people like you or me, big institutional buyers. Of course, you've got hedge funds and banks, and everyone wants a piece. And by the end of this year, we may even get the first official crypto ETF. Even if it just looks at crypto futures markets, we're going to see some big changes in this space. Remember, we're not just talking about some dodgy exchanges here. We've seen Coinbase have an IPO valuing it in the tens of billions of dollars, which recently hit the stock market earlier on in the year. And of course, you've got those big commission-free stockbrokers in the US like Robinhood, for example, who are making a huge amount of their revenue from the trading of cryptocurrencies too. In this video though, I'm choosing a few different assets which I am heavily invested in, and of course, I think are good, solid investments, and that's the key word here. I'm trying to avoid kind of speculative assets and things which can maybe go to the moon and 100x. I'm really talking about things that you or I, sensible long-term investors, might want to put into our portfolio, or at least consider putting into our portfolio, depending on our own personal situation and personal level of risk. But either way, let's get straight into it and start at the top. So in first place, and we couldn't have a serious conversation talking about cryptocurrency unless we talk about the OG, the number one, the biggest in the industry, the number one contender. It's Bitcoin, leading the way from very humble beginnings, created by a group or an individual known as Satoshi Nakamoto, who no one really knows who it is. Bitcoin has completely revolutionized the world of decentralized currencies. Not only has it made some people incredibly wealthy who held on to their investments from the early days, but of course it's led the way for tens of thousands of other cryptocurrencies to enter the space and try and solve the myriad of complex problems that we have in the digital world. Bitcoin at its heart is of course a decentralized currency which relies on multiple computers and multiple machines around the world to mine and effectively solve transactional problems and solve those issues, and in return for those miners to keep the network up, they're rewarded with chunks of Bitcoin. And of course, as more and more miners enter the network, that difficulty will increase. But overall, the network is run for profit, and it relies on people wanting a little bit of piece of that Bitcoin action to uphold that decentralized network. If we compare that system to a traditional centralized platform, just think of when you go to your current bank at the moment and you look at how much is in your bank account. Of course, those records are upheld by that bank. They are centralized, they are stored. If those bank servers completely went kaput, you'd probably have no idea how much you had in your bank, and that money would be wiped off the face of the earth.
Trust me, everything's gonna be fine.
But with cryptocurrency, because we've got a decentralized platform, there's no single point of failure, and we're not relying on a single point to rely on how much money is in your account. I think Bitcoin certainly can be a really good investment, and it's for a number of reasons. One of the first being that it's a deflationary currency. And remember that Bitcoin, by its nature, will only ever have 21 million coins at its maximum peak. Once it reaches 21 million coins, Bitcoin will become no more. There will be no more mining to create more coins, but there will be mining, of course, to verify those transactions and become rewarded. But of course, until we reach that point, and that point is tens of years away, we've got no idea how the platform will evolve and how the network will evolve. Therefore, unlike fiat money or paper money, where you have the US dollar and the UK pound, for example, these can be printed into infinity, and it all depends on what the government of the day and central banks of the day want to do. For example, when we look back at 2020 and all the stimulus, for example, money is technically losing its value as inflation rises, and the more you pump it up with a magical money printer, the less its value goes, whereas Bitcoin, for example, is deflationary. There won't be any more created. So at its minimum use case, Bitcoin really is aiming to be a store of value, because very similar, we compare it in the physical world to the likes of gold. Now, gold has been around for hundreds of years and acted as something that we can use to trade for different goods and services, and even backing currencies back in the day, like the US dollar and the pound for example. In more recent times, however, gold has been that safe haven. When your money is inflating or the stock market looks too volatile, lots of people jump to gold. And of course, gold has seen quite a resurgence over the last 10, 20, 30 years. Just think of your local high street, for example, all of those cash for gold places. As gold prices have risen, everyone wants a piece of the action. Gold, although you can still technically mine it and it's not super rare, it is rare enough that not enough can be mined very quickly, and it is expensive to mine. Therefore, gold has a certain level of scarcity, and of course, because it's relatively compact as well and quite dense, it's not a bad idea for a store of value. And of course, it's shiny too, so we love shiny things. Bitcoin really just translates gold in the physical world to the digital world. It can be divided in as many times as you need to. There's no need to worry about storing it, worrying about how heavy it's going to be, being able to move it around the world, for example, in digital wallets rather than big central bank vaults. And really, Bitcoin beats gold at its own games multiple ways over and potentially adds even some more use cases on top of that. So for comparison, as a minimum value, Bitcoin's current total market cap, so if we added up all the value of Bitcoin currently, we get to around the figure of $850 billion at its current value at the time of filming this video. If we compare that to gold, the current market cap is $11 trillion. So by my calculation, Bitcoin's price and Bitcoin's potential value has at least another 10 times to run, getting it to equal weight of gold. It's my belief and opinion, and lots of others, that potentially Bitcoin will eventually replace gold as that store of value, as gold suddenly loses its excitement and loses its charm. So even though you might think Bitcoin's expensive now, I'd love to be a fly on the wall in 10 years time and come back to this video and see how much it's grown. I think the only way is up, but it's going to be a very bumpy ride. In second place, and actually my largest holding in my portfolio, which I'll show you at the end, is Ethereum. Now remember, people get Ethereum and Ether mixed up quite a lot. So Ethereum is actually the network and the currency is actually called Ether. But of course, myself included, I always interchange the two terms. So just in case you hear the word Ether and think, what's he talking about? It's actually the real currency is called Ether and Ethereum's the network. So Ethereum came about because it's trying to solve a lot of different problems. Bitcoin, where it might be a very good store of value, is a bit poor at being transactional and is not very quick to exchange. And it takes a long time to make a Bitcoin transaction relatively on the blockchain compared to something like Ethereum. And of course, you can't have a cashless society where you're waiting to pay for something, but it takes half an hour to authenticate your purchase. That would be a very long queue. So the Ethereum network, for example, tries to speed up transaction times, allows you to add in smart contracts, and a huge amount of other use cases, which then becomes a platform which people can build upon. Just think of the recent craze of NFTs, for example. The Ethereum blockchain, the Ethereum platform, allows developers, allows artists, allows people like you and me to buy an NFT and then of course have that written into the blockchain, which confirms that we're the legal owner and that transaction has been made. If you want the best analogy, and lots of people come up with this kind of thing, they kind of say Ethereum and Ether is the cash of the network, whereas Bitcoin of course is the gold. Or they even say Ethereum is almost like the electrical grid that runs our houses and homes and businesses, and of course that's the platform of which we can then build on lots of other services. So when we call it a platform, just think of something like the internet. The internet is the platform, it's the base layer. But of course there's lots of other people involved. You've got your internet service provider, whoever gets the cables to your home. You've also got all of the mobile carriers. You've got people who look after the DNS records, for example, almost like the big address book of the internet. And all of those companies and all of those features sit on top of the network. So for example, the next time you're going to browse Netflix or Facebook or Instagram, these are services which are built on top of the internet, on top of that first layer. So of course, is the internet valuable? Of course it's extremely valuable, but nobody owns it. It's decentralized, so very similar to what the Ethereum network is trying to solve. Therefore, Ether, the currency of the Ethereum network, has value because of course people want to use the platform, and in exchange for using that platform and upholding that platform and providing all the power that we need and all the computers that we're currently running on that network, of course we need some incentive to run that. So the value of Ether really is tied to that value and tied to that supply and demand of how many people want to jump on top of and use the Ethereum network. Make sense? So Ether's not limited to 21 million coins like Bitcoin is, but there were some recent changes in Ethereum's network, which means that more coins are technically burned and becoming more scarce. And this effect meant that the price of Ethereum, price of Ether, actually rose significantly. But of course, just like any cryptocurrency, it's very much going to be a roller coaster from here. And as I write this video today, we've seen at least a 10% decline in the value of Ethereum, so hopefully my investments are going to improve over the next few years. Anyway, as mentioned, Ethereum, or Ether, is my largest investment in my crypto holding currently, and I have big hopes for this network. There's certainly a lot and a bright future ahead for this platform, in my opinion. And I'm certainly in this one for the long term. I've learned plenty of lessons along the way, which I'll speak about later. So in third choice, I'm not necessarily going to choose a single coin here, because as you'll see by market cap, once you take Bitcoin and Ethereum, after that there's tens of thousands of different coins. And of course there are some larger projects, and of course I'll speak about them now in the likes of Cardano, which is the network, and ADA, which is the currency of Cardano. And of course you have everything all the way going down to the likes of Dogecoin. There's also some really interesting other projects out there as well, like Chainlink and Polygon, for example. But not only do I personally not know enough about these, because their value isn't anywhere near the amounts that we're talking about when we talk about Ethereum and Bitcoin, I wouldn't necessarily want to say this would be a good investment. It might be a bit more speculative, and that's absolutely fine. But as long as you go into the investment with your eyes completely open and making sure that you allocate it based on that risk as well, no problem in my opinion. There are a ton of platforms out there, and everyone's aiming to solve different challenges which we might face in the future, and of course take advantage of the amazing growth we're seeing. I don't necessarily think that one project will rule them all. I think Bitcoin will certainly be here to stay, and there will be a set of other blockchains which will have to interoperate, because no one blockchain really can solve all the problems that we're seeing at the moment. So we're going to see a mixed world for a while, but of course things will evolve over the years. It's going to be a really interesting space. So although my personal opinion is to be careful on some of these alternative coins, or altcoins as you'll hear, I'm sure they'll make a lot of people incredibly rich in a very short amount of time, because no one's interested in long-term investing anymore. No one wants to do the hard work. They just want to get super rich quick, invest $1,000 and become a millionaire. But let's be honest, it's only going to happen for a small number of people, and most people will probably end up losing money, because of course it's even more volatile than the stock market. Think of this example. So just think how things have changed over the last 10, 20, 30, 40 plus years in supermarkets and grocery shopping. If you go and ask your parents or grandparents what it was like for them, they didn't have big supermarkets. You had the small mum and pop stores, or small butchers, or you go to the bakery, for example. But of course, as we know, the market evolves, companies get bigger and bigger, get a bit more greedy, and start knocking out those small companies one by one. Big companies like Walmart, for example, come into the town, offer everything for a cheaper service, knock all the competitors out the way. Similar in the UK, of course, with only a select number of very large supermarkets which pretty much own the whole market. This, in my opinion, is probably what will happen with the crypto market over the next few years. Those smaller coins, of course, will go out of fashion. The larger projects, as they start taking on more money and more institutional investors come in, and of course it's very interesting to make sure you follow the developers too, we'll end up with a handful of projects where all the money will be, and of course all that money wasted on the smaller projects will probably go to zero. But who's to say what the next few years is going to hold? So there's definitely room for plenty of competition, but just be aware those big projects will nudge those smaller and weaker ones away, even quicker than the Walmarts and the Tesco's of the world knocked out the small shops. Just as a bonus tip though, I will mention things like stable coins and other ways you can potentially make some money with cryptocurrency without having to technically invest in some really weird altcoins. At the moment, quite a lot of different exchanges are offering you interest just to hold these different stable coins, like Tether for example, or even just holding your cash, your pounds, your euros and your dollars on their platforms, and they're offering really attractive rates, even up to the likes of 12% interest, for example, which when you compare that to the best savings rate you can get with your bank at 0.1% or something like that, is really attractive. So remember, stable coins, for example, are tied back to the dollar. So although your dollar isn't necessarily going to improve in value, what you can do is just by holding that stable coin, get your interest, and some platforms, for example, that I'll speak about now, will pay that interest daily or even monthly. There's two platforms that I use to get interest. One of them is BlockFi and the second one is Nexo. I've got both of those links in the description, so if you want to get some free Bitcoin and also get yourself earning some interest on your crypto, go through those links and we'll both earn a little bit of interest. Now, what about all the downsides and all the risks? Well, in this area and in this new digital world, of course, there are plenty of risks out there and you need to be fully aware and fully go in it with your eyes open. This space, unlike the physical world and unlike the kind of traditional world of stocks and shares and different equities, this space is completely unregulated. And by unregulated, we mean that there's no laws governing what can happen with it. And of course, there's no protections by regulators if your money was to go completely down to zero. Holding cryptocurrency on anyone else's platform will always have a risk. If that company were to go down, they get hacked, for example, that money could be gone. Unless you hold that money outside, potentially in a cold store wallet or something like that, that money is always going to be at risk. And of course, any money you do have in a cryptocurrency only holds value if other people agree it does too. And there's nothing stopping huge whales coming along, selling all of their coins, and of course your value technically goes down to very low or even zero. There's also plenty of scammers in this space, and no doubt the scammers will find their way to the comment section here as well, so be extremely careful. Never send your crypto to someone who says they're going to send you 2 or 3 or 4 times back. Does it sound too good to be true? Yes, it's crazy. Don't do it. So in my opinion, if you wanted to take any of my advice, it would be in the cryptocurrency space. Even as much as I believe in it, and even as much as I know how powerful it's going to be in the future, I don't know everything. So I would only say invest what you are prepared to lose. And even though I'm quite heavily invested in cryptocurrency, I am absolutely mentally prepared, at least hopefully, in the event that everything went down to zero, I am prepared. And I am prepared to take that risk, and I've balanced up those risks, and I do believe that the upside is better than the downside. But if you're someone who can't stomach those paper losses in this very volatile asset class, then cryptocurrency, if you're just getting started, may not be for you. So just be really, really careful. But overall, genuinely, I do think there is room for cryptocurrency in everyone's portfolio. And depending on what level of risk you are, what age you are, and depending on how much you may want to put into this space, will depend on which cryptocurrencies you might want to invest in and the proportion of your portfolio you might want to allocate to it. But I do genuinely believe, for example, that as at least a hedge against inflation, the likes of Bitcoin could be really, really powerful. And of course, there are lots of investors now who are saying those single-digit percentages worth of your portfolio could be something to do. But of course, please seek out professional advice and get some advice professionally, not from people like me. Do all of your own research, but it could be something that you might want to look at. Finally, this asset class, of course, is susceptible to any stupid things you do, just like me, when you mine loads of Bitcoin in your own house back in 2017, and you end up selling it for £3,500, thinking you're Mr. Big Balls, and then a few years later, it's more than 10 times in value. Unfortunately, just like any asset, human emotions get in the way. Look out for fear of missing out. Make sure you take call-off periods. If you're looking to sell or buy something, maybe give yourself 24 hours because you're still going to make some stupid mistakes, I can guarantee it. As I promised, I would share my portfolio, so let's do that now. I'll go on the 2 different platforms where I hold my cryptocurrency. I'll just jump on my phone now. Right, so firstly, let's have a look at my BlockFi account. So its current value in US dollars is 21,402. I can't actually remember how much it's technically gone up. I think I've got some profit in there. Since I've been using BlockFi, I've had over $215 of interest paid, which is great. So BlockFi, and why I really like it is because if you deposit Bitcoin, Ethereum, or different other currencies, you can get your interest paid back on those same currencies. So if I look at my balance, for example, I've got 72% Ethereum and 27% Bitcoin. And of course, my money earned and my interest earned gets paid back in that, which is fantastic. And that's pretty much all I've got on the BlockFi side. And of course, as you see today, the markets are down. So I might, after this video, make a few more small investments. It might be a wise decision to actually dollar cost into crypto, just like you would any other investment. Anyway, that's my BlockFi account. So long live that one. Again, link on the description below if you want to join me, get some free Bitcoin as well. And next up is Nexo. This was another platform that I quite like. Again, one that you can earn some interest on. Got less money in here, but still a nice chunk of change. Got $12,000 in this platform. So, of course, with this platform as well, you're able to actually borrow money depending on your assets too. So I've got a credit line here of $2,000. I could go and blow it all, but then they would take away all my cryptocurrency. So just be careful out there. I've earned $23 of interest so far. I've also got some staked some other stuff here too, which is tied up for longer periods of time. And again, here I've pretty much got full Ethereum, but I've also got a bit of the Nexo token too. So Nexo is the token of choice for the Nexo platform. And if you want to earn more money in interest, you get paid out in Nexo token itself. And of course, the value of Nexo token, highly speculative, but of course is going to be linked to people wanting to use platforms like Nexo. And then of course you could exchange the Nexo platform, or the Nexo coin, I should say, for the likes of Ethereum or Bitcoin. Anyway, that's my portfolio at the moment. As I look at it now, I can remember it was up to a massive highs before, back when we had those crazy rises. So just remember it's incredibly volatile and this place is incredibly challenging. So just make sure you do all of your own research and be really, really careful out there and look after yourself. Anyway, I really hope you enjoyed the video. Drop me a like if you have, subscribe for more. Let me know what you're invested in below. I'd love to see kind of how you're balancing your portfolio with the potential cryptocurrency risks, how much you're maybe exposing yourself to cryptocurrency. I'll be really interested to know. Anyway, see you guys in the next one.